Greetings, family. This is your brother in Christ, and I want to teach you something very powerful. And I want to keep it very short and simple and also life-changing. Again, this is not a clickbait video. This is a real life-changing video to your Forex life, to your Nasdaq trading life, especially if you've been struggling to get entries on Nasdaq. You know, the most important thing about, making sure that you have the right entries on Nasdaq is because if you mess up an entry, probably just blows your account or you're in a deep drawdown. So this, if you're watching this, you want the most perfect entries. I'm not clickbaiting you guys. If this is a clickbait, you'll dislike. If it changes your life, you kindly like. And if it was your first time watching this, you will also subscribe. Please. And also there's that thank you button right there. Just click it to support what we do in this channel. So as you can see on my screen, I have a tool that will help you to get the best entries when it comes to Nasdaq. Let's just define it and understand what it does. Then we're going to go on and just show you examples in the market, show you how you can apply this in the right way. Some of you have come across this tool, but don't know how to use it in the right way. Okay, so let's define it. In finance, Fibonacci retracement is a method of technical analysis. So we submit to you that obviously the different types of technical methods of approaching the market with the trends, in trends, with trendline trading, with Forex chart patterns, with market structure, which is what I trade, Forex market structure. And then obviously we have the Fibonacci retracement way of really getting in entries. So this, for those who have been learning trading structure, it's gonna make it very easy for you to get in and out of trades, when to put your stop loss, when to put your take profit. Okay, so it says it's a method of technical analysis for determining support and resistance levels. They are named after their use of the Fibonacci sequence. The Fibonacci retracement is based on the idea that the market will retrace as a predictable portion of a move. Simple. So right now, I just want to go there and just dive into examples. I'm going to be making it on USD30 and also Nasdaq, but we're going to start obviously with Nasdaq. Here, remember, family, we have, I use personally 3 time frames when I'm trading Nasdaq. One, which is the 1 hour time frame that gives me my directional bias. 2, which is the M15, which kind of gives me the market faces and the market behavior and the overall market structure. Then we have 5, where I actually get to identify my entries because I trade market momentum. I trade injection of momentum, but you can get trades at any time, but I trade at specific times according to my trading plan. My students know this. Don't comment how we trade. So again, as I said, mentorship is available and currently on special. But again, this is what we offer as free content. It's just free. You just gotta watch and invest in your time. Okay. So the let's just start like this. When you want to predict a selling market, you're gonna start your Fibonacci from the beginning of the trend. So what you see as your lowest point to your highest point. Okay, when you want to predict a sell. Obviously, when you want to predict a buy, you're going to start vice versa from the top to the lowest of the trend because the market is going up. So in this case, we can definitely see that the market has been going down according to the overall structure or market structure on the 1 hour time frame. Let me just make it clear. We have that lower low, lower high, lower low, and obviously we currently created a lower high. Probably we might head to those levels. So again, you got to understand market structure again. But we can definitely see here what really happened, that when the market touched this level here, let's just go into it. This was the 50% level, which is quite the strongest level. As you can see, even previously, the market had a hard time in that. But it shows you that when the market touches this, imprints the right candle, look at the buy that was caught all the way to that level, which was the previous level. It broke this, but one could have easily put a take profit at this. which is the 38, or it went all the way up, obviously, to the 23. But you can, as you can see, this is actually, we just traded the New York Stock Exchange opening bell, and we can definitely see it now, how this played out. It spiked into it, and obviously it rejected. So you want to go on your 15 minutes, and you can clearly see the overall market structure. That as soon as it touches a level, it responds. As soon as it touches a level, it responds. So you can see here that sell, it is because of this level that we got. It's even going to go even further down. We can even go way further into the trend. We can definitely see right here when the market was buying, what influenced it was the 78. Can get again that when it broke, came back to retest. Remember, I trade break and retest. That we got a beautiful confirmation right there. Again, you could have gotten a way better entry at this level at the 23 when the market broke, came back. So also those who are well acquainted with what I've been teaching, with how I trade the break and retest, is exactly how you're going to trade this. Wait for the market to break a certain level, let it come back to retest, let it give you the right candles, and you enter. Trade with the trend, it's much better, it's much easier. Okay, so if obviously you want to go to the 15 minutes, it would clearly show you even this sell that came in, even this sell, when the market shot all the way down, obviously gave us that retracement. We can also see how that retracement came into play, went all the way up. Again, trade with the trend, look at that beautiful sell, gave us a nice rejection candle in the market. Obviously, you're going to be taking profit around about at this level. If you set your risk toward ratio, you're going to set it slightly above that spike. And as we can see, probably if you're using 1:2, I'm not sure here what's happening. Oh, okay. Not sure what I did. Oh, I wasn't using a selling one. There we go. This is selling one. Okay, 1:2 or 1:3, you could have easily hidden your take profit. There we go. This was a simple sniper entry, perfect entry trade. Even at this level, if you're buying and selling, I do advise that you don't trade against the trend, but if it does give you a proper entry here, look at that. You're going to put your stop loss around about there, put your entry right after the spike, and it was created. As you can see, 1:2 already hit. If you're using 1:3 right here, you could have easily gained. Beautiful. Why do I use this? I use 1:2 or 1:3. I don't go beyond that. That's how I trade. It's all about the money, not about the glory that you had the tighter stop loss or take profit. I just trade consistently in a very simple way. I keep my analysis very simple. I keep my chart very simple. You can see now that when it gets to this level, it broke, it's coming back to retest, and we can get more selling opportunities when it comes back to retest at this point. This is the live market. You can definitely see that we may get beautiful sells to the downside. Hopefully it plays out as I'm doing this. If not, you can check it out once, or you can go check it out, plot this, and you'll see. So I want to go to USD30. I'm going to go to USD30. And let's go into it again. We can definitely see that it's been a trending market. We're just going to go with the trend. Remember what I said, if you're anticipating a buy, you're going to obviously start from the top of the trend to the bottom. If you're anticipating a sell, you're going to start from the bottom to the top. So in this case, probably let's say we're anticipating sells, because we do see that high unless we identify a high that has been there in the market. Obviously, in this case, USD30 gave us a new high. So I'm just going to use that to see if I can predict sells. Let me just put it nicely over here. In this point, provided, just for the sake of this example, I just want to show you entries, provided this was actually a point of resistance. I don't trade trend reversals, or I don't trade against the trend. I rather wait for it to give me a reversal, then I just ride on it. Okay, so as you can see here, when this was actually starting an uptrend on this, we can definitely see it shot all the way up. That's fine, created a new high. Look at where the new high was created. But obviously, let's say one could have not caught that. That's the thing. You could have not caught that. So look at that. Obviously, we had the first touch right there. You could have had the second touch when it came back to retest and pushed all the way down. Okay, pushes all the way down. Probably you could have taken profit around about at the next zone right there. And we see it obviously continuing creating this lower high, respecting a bullish structure. We see it pushing all the way, coming back to retest. You could have gotten a beautiful buy. This buy, you could have taken profit either here or even right here. We can definitely see when it gets there, creates a new high, comes back, gives us a buying opportunity, okay? Or breaks it again, gives us another buying opportunity. We had another buying opportunity right here, all the way to the upside. So we can definitely see that's so powerful that we can get proper entries with this. But obviously, if you want more visible entries, clear entries, you can either just go on a 15 minutes and it will highlight them for you as beautiful as crystal clear. I'm telling you, you can use this on all indexes. You can use it even on DEX 30. I've been practicing DEX 30, even currencies, but obviously I'm a DEX 30, I'm a Nasdaq trader. That's my favorite. That's what I trade in my trading plan. Can definitely see if we put it again, it will give us a lot of sense. It will give us a lot of sense. We can definitely see right there, the overall market structure was a buy. Let's look for those buying opportunities. Clearly, the market obviously give us higher highs right here in this case. Let me just stay in drawing mode. Gives us higher highs. Look at when it comes back to retest. A beautiful buying opportunity all the way to the upside. It breaks that higher high, comes back to retest on the 61, and we push to the upside. Simple. It breaks that, creates a new high, and obviously comes back to retest on this higher high right here that it broke. And look at that. Come on, guys. Don't you tell me that you can get the best entries when it comes to this. I believe so. I believe one can get the best entries. I mean, with the tightest stop loss as possible, putting it just slightly above or below the spike in that case. Look at that. Could have had 1:3 or 1:2, whatever the case, whatever you use. Probably could have taken profit around about 1:2 because of the traffic that I was seeing on the left. But we can definitely see that 1:2 smashed. We can also see again that take profit smashed, take profit smashed, take profit smashed all the way. I'm not capping with you. I'm not clickbaiting you. This is some valuable information that is given for free. And all you just have to do is just have to watch the video till the end. Guys, I think I've reached the end. I don't want to make this a long video. As I said, I want to keep it a simple, short, but life-changing. So if this really blessed your life, changed your life, please kindly give us that subscribe. If you're a first-time viewer, if you're a returning subscriber, you know how we roll. Just like and also just click on that thank you button just to appreciate or just to show appreciation. Again, guys, thank you so much for giving me the opportunity to be sharing this with you, for watching till the end. God bless you. I'm your brother in Christ, signing out.